Welcome back. As promised, we have a lot of corporates in focus. Allcargo Logistics is the stock on our radar. The company has bought its partner stake, a 38.87% stake in Contract Logistics at an enterprise value of 373 crores. To discuss more on this development, Ravi Jakhar, who's the Chief Strategy Officer at Allcargo Logistics, joins us now to talk about that. Mr. Jakhar, good morning, and lots to talk about, a lot of developments in the company. So let me start one by one. You bought the 38.8% stake in Contract Logistics for about 373 crores. So can you tell us a little bit about what is the expectations in terms of growth for Contract Logistics? How much has the company grown since your acquisition in 2016? And what is the expected EBITDA per quarter? That is the kind of run rate that you're looking at for this business?
Yeah, so it's a pleasure to be on your show. Let me start with more near-term outlook on the business. The business has grown many-fold since our acquisition in 2016. We did about 27-28 crore EBITDA towards the start of this financial year in Q1. Last quarter, we did about 31, and we believe that this increasing trend should stay over the coming quarter. So that's the trend I would speak about, because as new contracts start getting signed and we manage more and more inventory for our clients, you would see revenue and EBITDA grow pretty much in line with our last 2-3 quarters of growth rate. In terms of the business, this is a very, very strategically important business for us. And like you rightly said, we have been doing a lot of corporate restructuring to align with our overall goal of having a clean structure, building strategically independent businesses, focusing on core businesses, and exiting from non-core. And this particular transaction takes care of both these aspects. We are able to focus more on our contract logistics business with this 100% stake belonging to us now. And at the same time, through the same transaction, we also divested the smaller custom clearance business that we did not see as core to our business.
So this 31 crore EBITDA that you spoke about, can you tell us, if you're seeing this trend increase, what could the growth be by the end of the year? What would the EBITDA per quarter look like? And what's the prognosis for FY24 as well?
So like I said, over the last 2 quarters, it has grown from about 27, 28 to about 31. Expect a similar growth rate to continue over the next 2 to 4 quarters.
Okay, all right. So they're talking about more than a 15% growth, at 31 crores odd. If I try to extrapolate it on an annual basis, it should be in that vicinity of around 130 crores for FY24.
Yeah, that's the opportunity the business offers, and we are
confident. Am I underestimating it? Yeah. Would you want to give a bigger number for this business, the EBITDA number on an annual basis?
We prefer to refrain from exact guidance, but I would say that we have seen this growth at a healthy rate, and that should continue. So we should see 15-20% kind of growth in this business.
Because at present, you're doing around 30 crores. That's around 120 crores. A growth of around 15%, would entail that you do around 140 crores. So we can leave it at that in terms of this business. EBITDA roughly on an annual basis could be around 140 crores. Let's move on. Will you be putting any more money into this business that you're acquiring? And also, you spoke about non-core assets. Now you're selling, closer around, you're selling some part of that, 61% stake, I think so, is what you're selling in one of those businesses. What do you do with the other 39%? And any more non-core assets you're looking to sell?
Yeah, so the 39% already belongs to the JV partner. So we are selling our 61%. That marks our full exit from the custom clearance business. Speaking of other non-core assets, we have already cleaned up most of the businesses across the group. There are 2 businesses which still are somewhat non-core. One is the fuel stations, which are in Gati, which we have been in the process of divesting, but there have been some regulatory approvals, etc., required for the fuel stations, which may take some more time. But it's a small business in terms of its contribution to bottom line as well. The second non-core business is the equipment business, which we have also been reducing our capital employed in that business. So these are 2 businesses, but apart from that, everything is already done. And what this transaction does, the core strategic aspect of this is that we have already demerged the 2 businesses, the real estate and the terminals business. What now remains behind in Allcargo is the international supply chain and the domestic supply chain. On the domestic supply chain, we had 2 partners. We had KWE in the express logistics business, and we had CCI group in the contract logistics. We announced earlier about acquiring the KWE stake. And now with the acquisition of the entire stake from CCI, effectively, this creates the platform for the contract logistics and express logistics business to be fully managed and controlled by us, and allows us to planned for these strategic, collaboration and synergies. And as you're aware, about 5 months ago, we had also taken the approval from the board for restructuring and aligning these businesses. So in the near future, you would hear more about how do we bring these businesses closer and make them more efficient.
So Ravi, just to get a number to sort of put it all together, your target for FY26, 25 to 30,000 crores in revenue, 24 to 2,700 crores in EBITDA. As you undertake all this restructuring to get to that FY26 target, just in terms of money, how much is all the divestment of non-core assets, as a sum? Can you leave us with a range? How much would that perhaps throw up in terms of cash to use? And if you're looking at any further strategic investments into the company like the one that you've now acquired 100% of, how much cash do you see yourself deploying or investing in any other inorganic moves which you think are strategic to your business?
Yeah, so on the non-core asset disposal, very small amounts remain. So put together, we're looking at a small number in the range of 100-150 crores, not much beyond that. On the acquisitions, we are very well placed in the domestic supply chain business. What we may entail is continue to evaluate strategic opportunities in the international supply chain business, wherein we look for, and these are not large ticket transactions, these will be smaller transactions specific to a particular geography, specific to a particular strategic cause that we want to pursue. And
do you already have something on the radar, Ravi? Since you're very clear on the inorganic route, do you have something on the radar?
No, there's nothing on the radar, but if you look at our last 19 acquisitions that we've done, and each one has been successful, the reason is that we're very strategic and proactive. We're not looking at transactions to be brought to us. We're always on the lookout for identifying what we need to do, whether we need to extend our presence across a particular geography, we want to launch a new product, or we want to achieve another strategic objective like getting into a business segment. So with that, I'm saying that we have clarity in terms of our goals, geographic expansion, and that clarity would lead to certain acquisitions that would follow.
Sure.
But those would be smaller strategic acquisitions, like I said, yeah.
All right, we'll leave it at that. Thanks a lot for joining us. There's lots happening in terms of streamlining of the business, and we look forward to hear from you again. That's Allcargo Logistics. They have an FY26 target. They've acquired remainder stake in contract logistics as well, and they say that the increasing trend of the EBITDA per quarter is something that could continue as far as contract logistics is concerned. But let's get back to the markets now and talk about some more stocks. Devin Choksi is sitting by with us patiently. Devin, I wanted your thoughts on Bajaj Auto because there are two very interesting notes that brokerages have come out with. So let me just put one of them on board. JP Morgan